Hello, everyone. This is Josio from the Cero Dinero Investment Group, and I'm making a recap video to talk about some of the positions that we had this week. And it's the weekend, and we can talk about what we predicted was going to happen since Monday. So I am going to be talking about Amazon, Lulu, and CPRX. Those were the three main plays that we did, and all three of them did pretty well. Now let me explain. So as you guys can see, I have the Amazon chart pulled out. And on Monday, I had done a previous video. I'm probably going to post the link here so you guys can see it. Talking about this triangle, right? We're looking at, it's really simple what we're going to do, guys. I'm going to give you guys a technical analysis and you guys can draw your own conclusions as into whether this was helpful or it was not. Any comments are welcome, by seeing what you guys say, how do you guys think, and your opinions. That also helps me grow. So that's also part of learning, right? I'm looking at Amazon and at the 4-hour chart. On Monday, we had talked about this. Amazon had touched the bottom of a triangle. So we explained how two things could have happened, right? We can either have a breakout to the downside, or we can have a bounce, right? Now, something that I forgot to mention is that sometimes things don't happen right away as you expect them, right? Keep in mind, it's Monday. When it's Monday and you're buying contracts, they're fresh because it's the first day out of that weekly contract. So if you bought a contract on Monday and you held it through all the way till Friday, you definitely made money. But for example, let's say we would have gotten in a play on Friday. We only have 1 day left before it expires. And again, I'm talking about weekly contracts. If you're holding a weekly contract, it's because most of the time, the reason why people like to hold weeklies is because they're cheaper and they do day trading, so they get in and out of positions quick. What's the advantage of that is that, well, when you get in and out quick, time decay doesn't really affect you as much compared to someone that's holding the contract for a longer period of time. So weeklies on Monday were good because you have 5 days. Well, actually, we had four because we had Thanksgiving, but we had on a regular week, you have 5 days before that contract expires. Now, I myself, I'm not a fan of weekly contracts. Most of my contracts are 2 weeks out because I'm also not a fan of, time decay. Time decay eats up on your contract as the contract progresses, right? So if you get it 2 weeks out, time decay affects you less. So that's a factor that now you're controlling that can, help you get money long term, right? Keep in mind, it's not some people, and I'm just gonna bring this up because the subject was brought up. Um, when you get a contract, a lot of people think that it's easy, right? You get a contract and it's 50-50. It can either go up or it can go down. That's not the truth. What happens is that there's more factors that are involved within contracts that are typically against you. So it's probably more like 70-30 or maybe 80-20 because now we have time decay, we have an expiration, right? So that's eating your contract. We have volatility, right? Implied volatility. So that's something else that's eating away on your contract. Now, can that help you? Yes, it can, but that might be a subject for a different conversation. Now, there's little things here and there that affect the contract, your strike price, right? The stock itself. So it's not really 50-50 whether it goes up and down. So again, for this specific play, I got a contract 2 weeks out for Amazon again, so we can fight against time decay. And this is what happened. We got in. This is Monday right here, guys. So it kind of like bounced a little, bounced a little, bounced a little, and then it broke out. Now we had talked about this before when we have a fake breakout. And again, we talked about this too. When you got to look at the overall picture, what's something else that might influence the movement of the stock? Well, we have a 200 EMA. It broke out, right? Let me draw you guys a line. As you guys can see right here, we had the breakout and then it went all the way down to 200 EMA. You could have made money here, right? You could have gotten some puts. We could have gone from 3,100, 3,100, all the way down to 30.55. That's money right there. Now, as you can see in this candle, this is when candle reading helps out. We bounced back the same day, right? We had a recovery. That's we have that long wick. After that, we had kind of like a flat day, and then we slowly went back inside the triangle. Now, from this point forward, see where my red line's at? That's our big, big, big. This is our what's it called? Resistance line. We had a huge resistance around this level, and as soon as it broke it, look at this. We had a break. Well, a breakout within a triangle, right? So it crossed several EMAs and SMAs, and now we're here. Now we're looking at Amazon potentially bouncing back out of this triangle or actually breaking out at this point right here. See, gap fill. We need this gap to get filled. Now it can bounce back, and it might take a little longer, sometime next week, for the breakout to actually happen, right? Or we might see a breakout coming out in this direction. But again, things were as planned. Technical analysis at its best. It did what we thought it was going to do, right? And we also predicted this little drop right here that happened. So again, don't just look at what you want to see. Look at what the market's giving you, and then make a conclusion as into what to do if this happens, right? Get puts. In the recovery, get calls. Breakout after the resistance point, get calls. Right here, breakout, get calls. If it bounces back down, get puts. It's that simple, guys. You guys react to what the market gives you. All right, so this was Amazon. So to me, this was a winning play. And then the next one, it's Lulu. All right, so Lulu was another triangle with a breakout. So when I was talking about this play, it was somewhere around, I think it was Thursday, maybe Wednesday. It was about to break out. And now we're looking at a bigger time frame. Now we're looking at the weekly time frame. Don't forget, different time frames show you a different picture. A weekly, it's a much bigger time frame, right? Now, when you're looking at a bigger time frame breakout, the breakout tends to be bigger. The bigger the time frame, the bigger the breakout. So here, the weekly, we got in right at the breakout, and bam, it happened. So just to give you guys an idea, the breakout was supposed to be roughly at 360. We're at 365. Potentially moving, I still have this contract open. Again, 2 weeks out. Potentially, we can reach higher points or break new heights. So I'm just going to hold my contract. And can I collect money today? I mean, not today because it's a weekend, but on Monday, yes, I can. Or based out of my conclusion and my work that I'm doing here, can we see a higher, breakout, right? Because we're really close to getting to the very top, which is 400. So I'm going to hold for maybe 30%, 40%. And at that point, I think that's more than enough for me to collect. But in my chat, I give you guys the chart and you guys make the decision. I provide the value and you guys decide how much risk you guys want to put into your position. If you guys made your money, I'm happy with 30, 40%. Some other people want to get 50, maybe 100%. So this is a clear example of how the weekly can also make you money. Again, the stock name is Lulu. It can be a potential play for you guys on Monday. And again, this is the weekly chart breakout. And then the last one, this is a penny stock. Yes, we also do penny stocks, guys. So this one was a huge triangle, right? We had our support here, support 1, 2, 3, 4, 4 sections of support. And again, I'm going to highlight them for, I know a lot of you guys are new to trading and technical analysis. So I'm going to make it as easy as possible for you guys to understand what I'm going to talk about. As you guys can see, I drew my line here, right? This is called my support line. Now the stock dropped to that support line 4 times, probably more than 4 times, but the clear ones are here. And we're looking at the weekly, also another big time frame, right? Support, 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 support. Now what happened every time it touched support? It bounced back. Now, so here, this is when I caught the movement. And from this point forward, So basically from 3 all the way to 370, we caught a move, right? Again, what's the prediction? It can either go up, fill the gap, right? And we bounce back down, or we can fill the gap and break out. And again, what are you supposed to do? Well, if it's going up within the triangle, then calls seems to be the right movement, right? We have our calls already. They're also open. Or you can buy for penny stocks. I tend to do regular shares instead of buying contracts because contracts they have a larger spread when it comes to penny stocks, and I don't like messing around with that because many times your fill won't happen right when you want it, so you're stuck canceling your order and redoing it again over and over until it gets filled. Can it be done? Yes, it can. But for penny stocks, again, I would rather trade shares because they're also cheaper, so you can buy a lot of them with the same amount of money you're going to be wasting. So again, if it stops here and we have a bounce back down, get some puts. If it breaks out, right, then that's a pretty good breakout here. Get some calls. And that's it, guys. It's really simple. All three of them were symmetrical triangles, right? We were looking for a breakout or a bounce back out of the triangle itself, and we saw it in all three of them: Amazon, Lulu, and CPRX. And this is basic. This is as simple as it can get when it comes to trading. Is there more factors that involve, that determine how you select your trades? Yes, but this is really simple. Like if I had a little brother that was 10 years old, he could probably predict this too. And I want everyone to learn. So we're going to keep on following these three plays just to give you guys an idea of how this works and what are the potential things that can happen. And we're going to use this as learning. And that's it, guys. Thank you for watching. And don't forget to like and subscribe to this new channel. We reached 20 members. I'm really proud of that. And I hope we have 40 by next month, right? Even if we have one extra member, that's more than enough for me. But thank you. And don't forget, we do have a chat. It's called the Cero Dinero Investment Group. If you're interested in what we do, and you like what you see, then join. Thank you for watching.